It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. The head of India's market regulator denies claims by Hindenburg Research of conflicts of interest over the Adani Group. Asian stocks making a positive start to the week as investors await a US inflation print that could be key to the next Fed rate decision. And a big week ahead for China tech earnings. We've got Tencent, Alibaba and JD.com set to give a snapshot of economic and consumer sentiment. First, though, let's check in on how markets are faring to kick off this new week. Maybe a bit quieter than the last one. Avril Hong's in Singapore. Avril.
Well, Paul, we're seeing Asia stocks, excluding Japan, rising for a second session, and this semblance of calm, I think, is returning to markets, increasingly making what happened on Monday, that onslaught that we saw across the region, particularly hitting Japan very badly, seeming like a blip now. Of course, Japan markets are closed today, but we have a lot of data to get through this week on top of what we're hearing, expecting from these Chinese tech earnings. It's also going to be about the US CPI retail sales number, and out of Japan, a GDP print. A lot to keep an eye on, Paul. Not sure if it'll be a quiet week for markets.
All right, thanks, Avril. Avril's sticking with us for this hour. And let's start off with this story out of India. The head of India's market regulator strongly denying allegations from Hindenburg Research of conflicts of interest around investigations into the Adani Group. The short seller published a report on Saturday claiming the Securities and Exchange Board chief and her husband made investments in products also backed by the brother of billionaire Gautam Adani. Bloomberg conglomerates reporter PR Sanjay joins us now with more. So Sanjay, we've got SEBI, the regulator, strongly rejecting these allegations. What are they saying?
So, as you rightly said, these are allegations at this point of time, very clearly. And on Saturday, when Hindenburg alleged that, Indian capital market regulator head is they have a conflict of interest since the chairperson and her husband has got investment in the obscure funds, which is controlled by brother of billionaire Gautam Adani. And hence, the investigation will be compromised. That was the main allegation. But this was clearly rejected. This allegation was clearly rejected by the SEBI chairperson. SEBI is like Indian capital market regulator. This rejected, saying that the full disclosures has been made by her husband and herself. So, and Adani clearly said, the conglomerate, which is also in the signature of things, they clearly said there's no commercial relationship with any investor, and they have also clearly mentioned that made the necessary disclosures. And they also said Hindenburg is manipulating a certain data which is available in the public. So related parties and the manager, the investment manager, Indian Infoline, has also clearly said there's no clear-cut relationship with any investor. So they are rejecting these allegations as baseless. But Hindenburg is still standing firm on their stance that they're clear. The market regulator has got some conflict of interest, and they are not expecting any kind of a fair investigation, which they have been harping on for since several months.
So we've got very serious allegations from Hindenburg, a strenuous denial from the regulator. Where is this heading? Is this going to be off to court next?
That's an interesting question. So now it has taken a fresh twist, rather a political twist. India's leading leader of opposition party, Rahul Gandhi, has taken up. He has actually, broadcasted a video as well, suggesting that how, like in the case of an Indian cricket or football, how a refereeing or umpiring has been compromised. So he has asked some pertinent questions about the authenticity of the investigation. So this has put government also in the spot. So we are expecting that more interventions from the government also to give more clarification on this one, since it has become a political game at this point of time. And to be very interested, to note that again Hindenburg has put out a tweet saying that, are we expecting any fair conclusion of this report? And SEBI has clearly said out of 24 cases, they have already concluded 23, and just one is pending. So coming days we are expecting more clarification from the government side and from the regulatory regulator side, and we are also expecting some kind of a fireworks from the short seller, US short seller Hindenburg.
Sanjay, it's also interesting the timing of this Hindenburg latest report coming out over the weekend, but also coming out weeks after SEBI started querying Hindenburg, asking for further information. Where are we on the investigation, both towards Adani as well as Hindenburg on this?
No, that's an interesting note. Supreme Court has given kind of a clear-cut chit saying that there is no scandal, involved in this one. But after that, when Parliament was in session, Hindenburg has clearly put out another thing saying that the investigation was not still completed, which they are saying that many investigations are not concluded in a fair and great manner, which Supreme Court also has pulled up SEBI at one point of time to expedite the investigation fast. And that's why the SEBI, the capital market regulator, was saying that Hindenburg, they have initiated an enforcement action against this US short seller, and hence they are retaliating with this kind of allegations. So now it will be very interesting to see how this investigation is going, and what was that one pending investigation by SEBI, how they will be heading, and what are the government going to tell at this point of time, since we have already heard from the conglomerate that they have no commercial relationship with any investor which is named in this one. We are not expecting more clarification from Adani, but we would be getting more information and disclosures from government and finance ministry, and of course the capital market regulator itself.
All right, Bloomberg conglomerates reporter PR Sanjay, and we're going to have more on this later in the hour with Member of Parliament Mawa Moitra. Let's get more on the markets for now, though, with Eli Lee, Chief Investment Strategist at Bank of Singapore. And Eli, I just want to pick up on what Sanjay was talking about there. I'm sure you're familiar with the Hindenburg story and its allegations against the regulator. Does this sort of thing, is this likely to change investor appetite, though, when it comes to India?
I doubt it. Now, I think, this is not the first time we've been through similar allegations, and I think investors are likely to focus on, I think, the larger macro picture. We're going to get an inflation print from India later this afternoon. I think it's going to show that inflation likely is on a favorable downtrend still. And I do think that, the growth trajectory that India is on continues to be quite favorable. And finally, I would say it is very telling that the Indian equity market actually was one of the most resilient among global markets during the volatility spike that we saw last week.
That's interesting you raised that, because we also saw a bit of froth taken out in line with what we saw globally. Also in India, that was a similar dynamic coming off the highs that we saw in late July. But after that, election result shock, we've largely seen Indian markets coming back, investors betting on how the growth story is intact for India. What is your sense, though, of whether enough froth has been taken out of the markets? Because we also see how Indian authorities have been trying to calm things down in the Indian markets as well.
Right. So I do think that it is arguable that even though valuations are elevated, amidst the historical trend, near the upper end of the trend, overall, I do think that the valuations are justified and quite reasonable. In fact, if you look at the fact that the growth of India above 8% over the last 12 months continues to be one of the highest amongst emerging markets, and the fact that after the elections, the fears that we have regarding, geopolitical uncertainty and so on has been mostly resolved, given that there will likely be policy continuity with the outcome of the election.
What is your sense of when it comes to India replacing China in terms of the MSCI EM index, the intense competition that it might potentially be facing from the likes of Taiwan, which has its own growth story, mainly from the AI theme, going for it?
I think India is certainly one of the key beneficiaries of the geopolitical tensions between US and China so far. And we see that in investor flows, and we see that in the performance of the corporates as well. The Indian equity market is likely to experience still, I think, consensus EPS growth of mid-teens, both this year and next year, and that speaks to very strong growth.
Eli, India was relatively immune to all the volatility that we saw roiling markets last week. Do you expect that to continue?
Yes, I do think so. I think that the broader macro factors that are driving India is pretty idiosyncratic to India. And I think over the next 3 to 5 years, we are still going to see pretty strong foreign investment flows into India. And the fact that these flows are going to see pretty sizable return on investment in terms of corporate earnings accretion over the next 12 to 24 months, I think will likely speak to a pretty resilient market ahead.
Well, we've got some inflation numbers due out of India later on today, expecting to see prices decelerating sharply. In your view, does this make easing at the next RBI meeting in October pretty much a lock?
Well, I think that it is, a good sign that inflation continues to be on a downtrend. I think one thing I'll be quite cautious of is that the next print that we'll see this afternoon is likely an effect of the high base effect that we saw in July last year. So this is likely a one-time fall in the inflation number. We think that you'll probably reaccelerate to above 4% later in this year. But the good news is that if we zoom into the details, we'll see that the inflation has become less widespread in India. So I think, overall, the macro picture still continues to be quite favorable.
Part of the complication for the RBI, I suppose, is food inflation and how tricky it is to predict given the weather. Do you think that throws a spanner into the works of your inflation expectations?
Yes, I think so. That is very hard to predict for India, and historically that's been a bugbear. The other factor would be, of course, the fact that they are a huge energy importer, and elevated energy prices has been very difficult for India to manage as well, which is why we think that the RBI is likely to wait for more signals from the Fed before starting cuts, because they will be very cautious of the effects of the currency and the knock-on impact on inflation in India as well.
That's a good point, because we also saw the rupee hitting another fresh record low against the greenback last week. How do you think it's going to manage those risks going forward on the currency?
I think it's going to be a juggling act. Now, on one hand, it is good and a positive for the RBI that the growth outlook continues to be very strong. But on the other hand, I think they're going to be watching very carefully what the Fed does at the September meeting before deciding on the next move. And I think they will be hoping to be able to cut if the Fed does move ahead.
But in terms of managing the currency volatility, do you think the RBI has enough firepower to continue stepping in?
I think for emerging market central banks in general, and that's not just the RBI, but also the PBOC and the BOJ, they are juggling, I think, quite a few balls in the air. The good news is we think the Fed will cut in September, and that's going to free up, I think, a lot of scope for emerging market central banks to follow on as well.
Eli, thank you for weighing in on that, but please stick around because we have more questions for you on the other side of this break. Back to you for now, Paul.
Yeah, and still to come, legal firm JSA is going to share their outlook on India's share sale market. We'll also talk to them about capital market regulation as well, in the light of those new allegations involving SEBI and Adani. That conversation coming up later. This is Bloomberg. All right, let's take a look at what's going on with the US Treasury futures at the moment. Of course, we do have markets in Japan closed, so there is no live trading of US Treasuries today. But this is what the futures are saying. Not a lot of change to the 5-year there. Yields just creeping a little bit higher across the curve. And in terms of the 2s, 10s, there's now just a spread between those of 12 basis points. Well, Eli Lee, Chief Investment Strategist at Bank of Singapore, is still with us. And Eli, a crucial week this week with CPI data coming out of the US. We have a chart on the Bloomberg indicating expectations around rate cuts. Good chance of 50 basis points in September. Do you think that that's a bit of an overreaction, though, based off some of the volatility we saw last week?
Yes, I think so, Paul. I think the Fed is likely to resist a 50 basis point move. But the bottom line is, I think the Fed is not going to react to, 1 week of market volatility. The Fed's not going to react to one data point, of the labor market. So I do think that the numbers that we see, before the next meeting are going to be fairly crucial to how the Fed's going to move. If we do see a fairly weak set of labor market numbers and this CPI print being weaker than expected, they could do 50. But at this point in time, that's not my base case, Paul.
In the past week, though, we've seen how the market concerns is really about whether we get this hard landing scenario. Do you think the reaction to the data this week is going to be more exacerbated if we get data that supports that versus anything that shows us that we might be still in for a soft landing?
Yes, so if we do see very weak macro data this week, we could go back into, I think, that volatility regime again. But overall, if we step back and ignoring, I think, the sum rule and all of that, it is hard to argue that the U.S. is heading into a recession. If we look at corporate earnings, they are still pretty strong. If we look at the labor market on the underlying basis, there are some segments such as healthcare, such as government hiring, that is quite resilient. And so I do think that when you get a fear event like last week, the market tends to retest and test its assumptions, which includes the fact that a soft landing is in place. But overall, I think that should be the base case.
And I know you say 50 is not your base case. The other part of the equation also about inflation, we have the likes of Fed Governor Michelle Bowman saying there are upside risks to it still. How much optionality do you think the Federal Reserve actually still has at this point, or is the market going to force its hand come September?
Well, with the last two print we've seen so far, inflation is quite clearly in a downtrend in my view. I think she's right that there's still some upside risk. There are always risks, which is why I think this next print that we're seeing will be quite crucial. And will line up very nicely for the Fed if they were to start their first cut in September. And that's going to be a critical move.
So the story on rate divergence really hasn't changed. The Fed's going to be easing. The BOJ's still got a hawkish bias. What's your outlook for the yen? Because we've seen that soften in the past couple of days. I mean, the path of least resistance, surely in the long term, has got to be stronger from here. What do you see?
Right. So for the BOJ, I still think that very broadly they are on a hiking path. But they are going to be obviously extra cautious from now, having set off the episode of volatility last week. I think what's quite key is that the last hike that they did was actually very well flagged. There was actually a consensus move that they would hike. But I do think that what caught the market a little bit by surprise was the hawkish tone by the governor, which set off this unwinding of very crowded positions. So I do think that if there are no clear signs that the market has calmed down definitively, I think the BOJ is very likely to be very careful about the timing of the next hike.
So how are you approaching investing in Japan right now? After that week of extreme volatility, do you buy or do you take this opportunity to take some profit and get out?
Right. So we were overweight Japan for most of the last 15 months, but we had downgraded our Japanese equities position to neutral in June of this year, about 2 months ago. And right now, we think it's more a bottom-up stock-picking game. We don't think value has emerged clearly just yet, and we are quite cautious that the unwinding is not fully done. But we do see some opportunities still in the consumer sector, the technology sector, and also the financial sector.
Eli, a couple of weeks ago, we were having this conversation about the PBOC easing in the wake of third plenum that was uninspiring. We have more rate decisions in a way due this week as well. Do you see more easing from the PBOC into the rest of the year?
Yes, we think they'll likely continue to cut. The last two cuts in June and July were surprises to the market, and I think that's very key because I think over the very short term, there were some real headwinds for the Chinese economy. I think they continue to be an easing path. I think it is encouraging for them that some of the pressure of CNY weakness have been taken off with the recalibration in Asian currency strength over the last 2 weeks or so. And again, I think if the Fed does cut in September, that's going to really free up a lot of scope for the PBOC to continue easing and cutting rates.
If that's the case, then what are we going to see in terms of the PBOC showdown with the bond markets? Will it be able to, keep yields where they want?
Right. I think that while they can control short-dated bonds, where long-dated bond yields move is a function of how the market trades. I think what they are doing in that area right now is mostly a function of risk management, that they don't want to see a bubble form in that part of the curve. And also an inverted curve is not good for banking profits as well. So I do think that there will be more likely market-oriented actions to ensure that a bubble in that part of the asset market is not forming.
Given the recalibration, as you mentioned, about what we're seeing in Asian currencies, and it's like strengthening that we're seeing even on the Chinese renminbi, do you think the next part of the market to watch, aside from the unwinding of yen carry, might be yuan carry?
I think that's possible. But I think, in terms of the popularity of both trades, the JPY carry trade is far larger by our estimates. So while that could be, I think, a tail risk, I don't think that's not something that we are immediately worried about right this moment.
Okay, Eli, thank you for sharing your insights with us as always. Eli Lee of Bank of Singapore. Plenty more ahead. This is Bloomberg.
Here's some of the top geopolitical stories that we're following today. Israeli forces are defending Saturday's deadly missile attack on Gaza, saying the strike was aimed at a Hamas command and control center embedded within a school and adjacent mosque. Hamas reported about 100 people killed in the attack. Meanwhile, Israel says about 30 projectiles were fired from Lebanon towards the area of Kabri in northern Israel, but no injuries were reported. Israel remains on alert for possible retaliation from Iran or its proxies after the assassinations of senior Hamas and Hezbollah leaders. Ukraine's president says Russian troops have started a fire at an occupied nuclear power plant, calling on the world and the International Atomic Energy Agency to react. Volodymyr Zelensky said in a post on X late on Sunday that radiation levels were within a normal range. Earlier, Zelensky called on allies to allow Kyiv to strike deep within Russian territory as Moscow hit back with missile strikes following last week's cross-border incursion by Ukrainian forces. Let's take a look at some of the stocks that we're watching as well. Here are some green shares or green stocks in China engaged in environmental protection. They're seeing a pretty decent rally at the moment. GAD Environmental particularly better by 20%. China aiming to make significant progress in reducing pollution and carbon emissions. Macau casino stocks as well looking okay after slipping, I beg your pardon, after the Macau government's decision to criminalise illegal money exchange activities. More to come. This is Bloomberg. The head of India's market regulator has strongly denied allegations from Hindenburg Research of conflicts of interest around investigations into the Adani Group. The short seller published a report on Saturday claiming that the Securities and Exchange Board chief and her husband made investments in products also backed by the brother of billionaire Gautam Adani. Joining us now is Indian Member of Parliament Mahua Moitra. She's a member of the opposition TMC party and has called for the resignation of the SEBI chief. Mahua, surely this is a case of innocent until proven guilty. Why are you calling for the resignation of the SEBI boss?
No, it isn't a case of innocent until proven guilty. I think her guilt is there for everyone to see. There are two very important things here. She and her husband were private individuals in 2015. We accept that. While in 2015, she had invested in a fund, in an offshore, opaque, multi-layered fund, which was owned by GDOF. The person who started the fund was in 2015 a director in Adani Enterprises, a fact that she has conveniently omitted to mention. She went on to become a whole-time director of the SEBI. When she became an whole-time director of SEBI, she did not disclose that she was at that time connected with anyone with Adani Enterprises. She transferred the shares to her husband at that time. In March 2022, before taking on the responsibility as chairperson, she had a separate consulting entity. She then allowed her husband to consult other players via that consulting entity. And in 23-24, when we petitioned the Supreme Court of India, and the Supreme Court of India told SEBI to give a report on the Adani scam to the Supreme Court, nowhere did Madhavi Puri, the chairperson of the SEBI, said, nowhere did she say that she was at any point in time involved with any entity that she had been trusted to regulate. In fact, the report of the SEBI said that we have no idea about these FPIs. We have no idea. We've drawn a blank. We cannot find out who they are and who they're ultimately owned by. In 2018, this chairperson had written in her personal capacity to the fund itself. She had been an investor in the fund. How do you deny that and then tell the Supreme Court that I don't even know who these funds are? The second thing is, she says that her consulting company is now being run by her husband. In 2022, financial year 2022, she disclosed an income of over $200,000, which is about 4 times her official salary at the SEBI, as consulting income via this consulting entity. We do not know who her husband consulted. Her husband was an advisor for Blackstone. She has recused herself from Blackstone, but we have no idea of any other entity that her husband used this consulting firm to consult with. She has been tasked with the fiduciary responsibility of checking, as a regulator, of checking on all these companies that are operating in this space. And she herself has been associated with a fund which Gautam Adani's older brother, Vinod Adani, has used to siphon monies out of India. So it's a very clear conflict. She doesn't deny it. Yep.
I want to make it very clear that there have been no charges brought. SEBI rejects these allegations. Would you be prepared to put this evidence before a court and test it before the courts?
Yes, of course we would be. And there is no way. You have to understand one thing. India is now being run by a nexus. It is the Adani Prime Minister nexus. We have been shouting about this since the year 2020. Right? All of this, at some point or the other, some of it has been in the public domain. We have never been able to get anywhere. I have written to the SEBI personally about 5 letters, no answer. We've brought it up in Parliament, no answer. Adani, the Prime Minister's office, the Finance Ministry, the Cabinet Appointments Committee, and the SEBI, controlled by Madhavi Puri, are all in cahoots. There is no way that SEBI will ever come out and accept this. The second most important thing is when it comes to SEBI, Madhavi Puri, who's the chairperson, already had information about the Adani coal invoicing scam. She was appointed chairperson as a quid pro quo for going slow on the Adani coal invoicing scam. The person who played the deal of the broker, according to market rumors, is the ex-chief secretary of Gujarat who worked with Prime Minister Modi when he was chief minister of Gujarat. So it's an absolutely Machiavellian nexus, and there's no way that SEBI is ever going to come out and say anything. So we have to go to the courts. We are pushing for a joint parliamentary committee in Parliament.
Are you worried you could be sued for defamation?
Let them try. Adani threatened to sue Hindenburg for defamation. The first rule of defamation is it has to be patently false. That's the first rule of defamation. Adani stocks fell, I think, over, I don't even know how many billions of dollars in January last year when Hindenburg came out with their report. Apart from SEBI sending a trumped-up show cause notice to Hindenburg, what action has Adani been able to take so far? Nothing, simply because most of it is true.
All right, I just want to be very clear for our viewers that India's securities regulator says it has adequate internal mechanisms to address issues related to conflicts of interest and that its chairperson has made relevant disclosures as well. At the end of this saga, regardless of how it ends, what sort of reforms would you like to see?
We would like to see that SEBI has got to have a more transparent mechanism. As of now, the gentleman on the Corporate Governance Committee of SEBI is a brother-in-law. It's not a brother-in-law, it's an in-law. His son is married to his daughter of Mr. Adani. The lawyer called Cyril Schroff is on the Corporate Governance Committee on Adani. SEBI is investigating Adani. How do you have your in-law on the same committee? The judge, jury, and executioner are all controlled by Adani. How do you have a chairperson of a regulator who is connected to Adani's FBI as somebody who's investigating Adani's stock? I mean, the entire thing it just stinks. So we would like reform that actually makes SEBI an independent regulator. This is something that where India's sort of reputation as a global market for investment is at stake. We cannot be seen to be non-transparent. We cannot be seen to be opaque. We cannot be seen to be slow. We have to take quick action and clean up the system. This is in India's interest.
All right. Well, Adani claims that these allegations are politically motivated. What's your view?
Adani has always had one defense. He blames everyone from Jawaharlal Nehru, the Prime Minister of India, to George Soros. He wakes up in the morning and says George Soros is controlling India, and apparently the opposition is all on George Soros' payroll. So till Adani can come up with a better excuse, we're not stopping.
All right, Indian Member of Parliament Mahua Moitra there. Thank you for joining us. Still to come, we're going to talk to Indian legal firm JSA about capital market regulation in light of a short seller's new allegations about SEBI and Adani. That's up next. This is Bloomberg. All right, welcome back to Bloomberg Markets Asia. You are watching the India Focus. Let's take a look at how Indian markets are tracking just ahead of the open. A little bit softer here. Sensex pre-market off by almost 0.5%. It is, of course, a big day for India. CPI due out for July shortly. That's seen slowing pretty sharply to 3.6% on year. And, of course, the RBI stayed on hold last week. Let's take a look at how stocks in Adani are tracking as well, because, of course, we have this story of Hindenburg accusing the regulator, SEBI, of a conflict of interest when it came to dealing with Adani. SEBI strongly denies these claims, saying it has adequate internal mechanisms to address issues of conflict of interest, that its chairperson made relevant disclosures. But seeing a little bit of weakness in Adani stocks in the pre-market there. Now, our next guest hails from one of the top 5 legal firms in India, one of the oldest equity capital markets practices in the country as well. Arka Mukherjee is partner at JSA Advocates and Solicitors and has structured some of India's big infrastructure investment trusts and initial public offerings as well. Arka, I just want to start, if I can, with the story of the moment. I mean, I'm sure you're familiar with these latest accusations from Hindenburg around SEBI. How much confidence... Okay, I'm not going to ask you. I won't be asking you about the case directly, but I am interested in how much confidence you have in the regulator and capital markets more broadly.
See, well, I'll talk about it generally. I think this was a prefixed interview, and the developments came over the weekend, so it would be. I would not be able to touch about the issue at all. But if you generally ask me about the Indian regulations, I think the Indian market have matured very rapidly over the past decade or so. The fact that there are precise and efficient regulations and meticulous supervision by the regulator, which is aimed at investor protection in the primary market, and that is where I specialize in. I specialize in the ECM market, the primary market. We have seen robust investor protection laws there, and in terms of government policies, we have also seen very prudent and very kosher corporate governance mechanism, which is fueled the market the way it is today. As per it, and again talking generally, as per data available, we are number one in terms of public market, in terms of number of primary issuances, in terms of fundraise, we might be, slightly behind than the few other jurisdictions. But in terms of number of public issues, we are number one. I think there's a lot of investor confidence, at least in the primary market, because of the disclosure-based regime and strong and a very supervision by the regulator has always been over the past decade or so has been right at the top. And that has given the confidence and that has fueled the market the way it is today.
Arka, I take your point about how you think that the regulatory landscape is very robust, but given these latest allegations, I think it's difficult to say that SEBI is not going to come under more scrutiny going forward. How do you think India then matches up against some of the other EM markets?
Sorry. I'm sorry. I'm very sorry, but this was a prefixed interview on some other issues. I can talk about the Indian markets in general, the laws in general. I will not be able to address your questions directly. I'm sorry. This is, as a responsible professional, this is not my forte. And in some sense, as a responsible professional, we cannot comment on your allegations. We don't do that.
How do you see, Arka? How do you see India compared to other EM markets?
We are at a very sweet stall level on a. I would not throw numbers at you. You would be better than that. But we are in an extremely sweet spot. The equity funds and the SIPs, which is called the systematic investment funds, and the sector allocation in terms of mutual fund entry into the capital market has been at its all-time high. And in fact, I've been told by my banker friends and colleagues that India needs at least 1 lakh crore paper, not of something like that, to sort of looking at, for it to absorb the entire capital that is floating in the market. Currently, if you ask me, there is a demand and supply mismatch in certain sectors. For example, renewables, for example, we need more rate papers coming in. And the foreign investors have benefited from this, basically Indian papers. And that is why the buoyancy in the market, I think, is, we have never seen anything like this, right? And as per it, as I mentioned earlier, we are in some sense number one in terms of the number of issues. Also, the fact that we forget something that this is all fired by the robust corporate earnings. Robust corporate earnings that the Indian corporate have given you over the last few years, last few quarters. That has been very progressive, and that has that's created the balance in the market, and that's what you see, in terms of the growth in the capital markets. Yes.
Arka, what about the monetary policy going forward? We saw last week the RBI sounding a bit more hawkish than some had expected as it flagged those how inflation still looks pretty stubborn. There were some in the markets that actually expected the RBI to potentially, start that easing cycle last week. We're going to get some inflation data out of India later today. But going forward, what kind of easing expectations do you have from the RBI?
Again, Avril, not my forte particularly. I'm mostly a capital markets lawyer, but given where the RBI and SEBI both are, I think we are basically conservative. We are a very prudent economy, and the regulators will take its course and ensure that both in terms of inflation and both in terms of market buoyancy, both are maintained.
Akar, I want to talk a little bit about India's infrastructure sector as well. That obviously needs a huge amount of capital requirements. How well is the country placed to meet that?
See, given the federal structure of India, the budget allocations in terms of infrastructure is met by both the center and the state. I think 80-85% of the infrastructure capex requirements are, mostly met through, traditional sources such as NBFCs, the debt market, through long-term borrowings by banks, and the government has a lot of, allocation, in terms of the infra space. However, I believe certain game changers which has been announced in the budget is the viability gap funding measures. In terms of our, eligible projects viability gap, funding measures where, an upfront grant is promised and is sort of delivered in various milestones, to projects which are economically viable, but may marginally fall short, of the profitability structure. The other one is, of course, more, the public-private participation, and it's moving slowly towards the private participation more and more. But I believe the game changer has been InvITs. InvITs are like a business trusts, in certain jurisdictions. I think that, and we see so much, basically so many registrations in InvITs. What InvITs allow India to do, is that it allows foreign participation, foreign capital coming into the infra sector, which was not earlier allowed. There is sovereign funds, are sort of quite keen to buy into the India story. More and more funds are coming into the greenfield project. We've seen NHI, and we are, one of the sort of law firms instrumental in sort of, basically establishing the InvIT fund of NHI, and 50% of this InvITs are, the money allocated is towards the road sector, and NHI recently has raised around 16,000 crores coming to monetize the assets. So what an InvIT structure does is, it's free. It frees up your capital, and it, allows and gives more confidence, for lenders to invest into the system, because they, ultimately the capital can be cleaned up and monetized, by way of InvITs.
We're out of time, but thank you very much for joining us, Akka Mukherjee of JSA Advocates and Solicitors there. Let's check the Indian markets, how they're doing, specifically how Adani stock is tracking at the moment. We've got Adani Power opening up below the 100-day moving average. That's the first time that has happened since March. We've got the broader market down also, but Adani Enterprises off by 3.7%. Adani Power now down 6%. And of course, we have had this fresh allegations today from Hindenburg regarding SEBI. The regulator in India, the regulator, however, saying that it addresses issues related to conflict of interest, and it calls Hindenburg's allegation that its regulations on real estate investment trusts that benefit large multinational financial conglomerates inappropriate, and it says its investigation into whether Hindenburg violated Indian securities laws is ongoing. So that battle between Hindenburg and the regulator SEBI still rolling on. Staying with the markets, analysts expect that the weighting for Indian stocks to close in on China in the MSCI benchmark index for developing nations. For more details on this, let's get to our stocks reporter, Chiranjeevi Chakraborty in Mumbai. So, CJ, how likely is it that we're going to see MSCI increasing India's weighting on that index?
Well, it seems like the estimates at this point of time is that India could see its weight increase in the MSCI Emerging Market Index, which is the flagship index for the index aggregator when it comes to the emerging market, by as much as 1 to 1.5 percentage points, which should bring it very close or even neck to neck, with China's present weighting at the end of July, which was a little over 22%. So clearly, this would be a milestone that probably nobody saw coming 3 years ago, when India's weight was around 8 to 9%, and China was sitting at over 30% on the index. So clearly this goes to show the way the fate of these two countries or stock markets in particular are converging or are diverging, actually, in the sense that India has been going up and up and up, boosted by its economy and corporate earnings, whereas China has been struggling, as we all know, because of regulatory headwinds, an economic slowdown, and geopolitical concerns.
CJ, suddenly Indian markets have come a long way, to your point. What extent are we likely to see further global inflows with this potential change in the pecking order, and how is it likely to reinvigorate India's markets?
Avril, the thing right now is that if you look at inflows, foreign inflows into India, they have lost a bit of momentum so far this year. But if we do see this shift happening or taking place in the coming months or quarters, you could expect that a lot of global fund managers, especially tied to the MSCI EM index, could be compelled, to look at India as a separate asset class, as we argued in our story. They could also be compelled to increase their, weightings as far as Indian stocks are concerned. Let's not forget, prior to the elections, we did report, citing JP Morgan, that they expect if all the underweight positions that global fund managers currently hold on Indian stocks, it could trigger an avalanche of inflows to the extent of $100 billion in the coming years. So clearly, there is a lot of potential when it comes to foreign inflows into India. And if this, historic moment does fructify in the coming, months and quarters, then you could see a lot of those global inflows shifting or accelerating towards India.
All right, stocks reporter CJ Chakraborty there in Mumbai. We have plenty more ahead. This is Bloomberg. All right, let's take a look at how some of these China technology names are performing this hour. We are going to, of course, have some big earnings out this week from Tencent, Alibaba, JD.com as well. Ahead of those results, we do have Tencent and Alibaba pushing higher, and what's going to be a big week for big China tech. Let's take a look at how the Kospi is performing as well. Of course, we have no trade in Japan today, closed for a public holiday, but stocks in Korea broadly higher. The Kospi better by 1% right now. Chip names and AI-linked names also performing pretty well. We got XK Hynix better by 4.4% at the moment. Samsung Electronics also in positive territory there. Let's take a look at how some of markets are moving globally at the moment as well. We've got somewhat quieter day today around the Asia-Pacific, something of a sigh of relief for many of the indexes also after the volatility of last week. We've got Singapore off by about 0.8% right now. The TAIEX performing pretty well, better by 1.5% in Taiwan at the moment. And like I say, chip stocks, AI-related names, enjoying something of a rally at the moment. That is it from Bloomberg Markets Asia. Horizons Middle East and Africa coming up next. This is Bloomberg.